All
You
right,
didn't want
we
to do
are
this.
live. Welcome to the Stocks with Josh show. We are going to have a crypto special here today, and if we can squeeze into the time frame, we're going to talk about Ethereum for Preet. Um, we're going to be asking some questions, and I'm going to be answering some questions that I think are pretty important. Okay, so right now we saw Bitcoin have this takeoff moment for over the last couple of weeks, and it went up and made a brand new high. And instead of it continuing to pump, it's pulled right back to where it was a couple weeks back, and causing a lot of people to wonder if it's just another false start. I mean, crypto is really having its day, especially with the alts, of shaking people out of their trades and their confidence. And if we take a step back and look at the fear and greed index, we're in neutral territory, which really is a perfect view. Means that there's no great fear. You're right. People aren't necessarily panic selling what they've got, but they've got no confidence in buying or increasing their positions. Of course, I'm going to take you into the charts and I'm going to make some predictions. I've got my man, Kiwi Mo, aka Mark from Tribal Trades. He's got his own YouTube page. Make sure you go over and support him. Welcome to the show, Mark. I know you've come prepared. Why don't we just kick things off? And I'd love to hear your opinion as to whether or not we are still in the upward trend of the Bitcoin bull run.
Yeah, well, I think I mean, it's a great question. And again, thank you, Josh, for having me on the show here today. I think looking at historically, the first question, and there's a lot of conjecture right now, is there still the 4-year cycle? Now, you and I agree that we lean more towards that the 4-year cycle is still in play and still intact. And for me, it is until it isn't, okay? That doesn't mean that I would blindly make moves based on that assumption, but I can certainly help me with my trading and prepare in my plans and my strategy. So if we look at historical tops and cycle top, we can come up to some kind of a conclusion of when generally the 4-year cycle would come to an end. So historically, number one, September is Bitcoin's worst month by quite some distance, okay? And June is its second worst month, and August is its third worst month. So basically, we're coming out of one of Bitcoin's third worst months into historically Bitcoin's worst month, and the stock market generally cools seasonally around September as well. And so if we take that all into account, what we're seeing now in the 4-year cycle sense is quite normal and expected. However, it doesn't mean that it's the end. It could well be that the cycle finishes in September, or Rectember as they would say, but it could also finish as late as December. And the data comes in, if you go from cycle top to cycle top, this is quite incredible really. From one cycle top from 2013 to 17 was about 1,400 days, and the cycle top from 2017 to 2021 was again about 1,400 days. Only like 50 days different. Absolutely incredible. If that was to play out again around that 1,400 day area, we would, come out with some kind of a October to November top, okay, based on cycle top to cycle top. But some people like go from Bitcoin halving to Bitcoin cycle top. And again, it's quite incredible from the two previous cycles, the Bitcoin halving, 2016 to 17 and 20 to 2021, around about 500 days. You just can't split these stats. That brings us through October again, is the winner there again. Then you go from cycle low to cycle top. And again, Josh, incredible, around about 1,000 days both times. Now, look, we've only got those two previous cycles to go off, but each time there are days within each other, and that would bring us out to either October or possibly September, okay? So, and then you've got to throw into the mix that every cycle top has either been in November or December. First top, November. Second top, December. Third top, November. Fourth top, are we going to see December? So we could see an early finish and Rectember wrecks everything, or maybe we go into December. And if we're still in December and things are still bullish, you're going to hear the voices cry louder and louder for a super cycle. And maybe that's when the end comes down. But either way, I think people should be prepared for one or the other. And that's why, the most important rule and one of your rules of trading, one of your 4 rules, is trade the trend. Now, currently the trend is down. So we can make money shorting the market if you know how to short the market, or be patient to wait until we can see some kind of a bullish reversal trend, and the momentum indicators can give us some early insight into that, or we start to see some higher highs and higher lows, and then we have confidence to get back into the market again. I'm not, for me, buying a dip that keeps dipping at this point in the market, I think is dangerous, because if it finishes early, you'll end up buying a dip that just keeps dipping all the way down to the bottom. And of course, if you don't buy the dip or some kind of a dip, you might miss out on huge gains. So the strategy I have is trade the trend. When the trend is up, I get in, then I can ride it up. If it finishes in December, I'll enjoy the benefits. If we go into a super cycle, I enjoy the benefits. If the trend shifts down, I'm out. I'm not dollar cost averaging down. I'm out. That way, I'm not going to be caught bag holding all the way to the bottom. This is different, of course, to my strategy much earlier in the cycle. I think this is prudent for being where we are in the cycle at the moment. And I think it works whether the cycle finishes, the 4-year cycle finishes, and I think it works if it keeps going.
Wow, that was a great overview. I think some folks could go back to the beginning of the video and watch that again, because you really packed in a lot of details. I'm going to try to unpack some of what you were saying and just share my perspective. One of the ways that I successfully called the bottom within a couple $1,000s was based on the length of time that we would typically have a winter season. So how long would we stay in a winter? And then I also gauged it to the event of the FTX collapse. So when we were at around 409 days in the winter, and the average winter was around 411 days, as soon as the FTX collapse occurred, I said, we're not going to get any worse than this right now. So it's time to start buying. Of course, at that point, all confidence was shaken in Bitcoin. And so what Mark's laying out for you right now is we're doing the reverse. We're looking at the amount of time it normally takes for Bitcoin to peak, okay? Now, I have been staring at these charts. I've been doing that candle theory, studying everything I can, and I've got some problems with the Bitcoin chart. Okay, I've got some problems with it. It's doing things it's never done before. And of course, the minute I say that, a lot of folks out there are going to say, because we're in a super cycle, because this time is different. You're not going to catch me making large financial decisions on the idea that this time is different. Okay, it could be, and then I'll learn something if I get out too early or something along those lines. And then it's different. I'm not going to panic over that. I'm going to study that, and I'm going to try to assess what it means now. But if we take a big step back, the last 3 Bitcoin tops occurred after the halving at 12 months. And then the one after that was 17 months. And the last one was 18 months. And so the consensus, if you're going by the amount of time since the halving, is between 17 and 18 months. Well, guess where we're at? We're at 16 and a half months approximately. Okay. So we have time left in this Bitcoin cycle to make that top. Okay. We've got time left to do it. And it does put the top oh so conveniently in one of the timeframes in which Bitcoin has traditionally topped, and also a timeframe in which people are imagining the markets could be bullish, which is November. We just have to get through September to get to that joyous potential October-November push. I want to remind all of the beginning crypto investors that the way that this works traditionally is that when Bitcoin peaks and it begins to slow down and do a little bit of consolidating at the top, you all of a sudden begin to see Ethereum get its strength and its legs, and it begins to move. And because money is essentially pouring out of Bitcoin and profit taking there, and it's flowing over into Ethereum, which is kind of viewed as the next best crypto investment. And then after Ethereum, you begin to see the alts run. And this is sort of people beginning to lock in some profits from the bull cycle, from the winter to the bull cycle, and they begin to diversify and put some winnings into some other projects. Okay, this is the way it's always been. But I do think we're in a different situation. I just am not willing to go as far as those differences, meaning that I should chuck everything that's happened historically as well as the charts out the window. Not going to do it. I want to go into the charts, and we're going to spend a little bit of time in the charts, and it's going to be super simple. You're going to learn something. If I go into these charts, you're going to learn something, I promise you. And I want to make a point about what is the trend. Mark had made the comment that the local trend is down, and it's true. We went up and made a brand new all-time high. We pulled back, and I'm going to quickly show you where we're at. Let's go look at the chart real quick. And I want you, Mark, after I'm done showing them the chart, I'm going to set you up in advance for your question. I want to talk about the liquidations that we just saw, because we were pumping up at 125,000, and then all of a sudden a whale came along and slapped some Bitcoin on the table, sold a big pile, and liquidated nearly $900 million worth of longs at that point. And that's a very important point. I'm going to have you dive into it, but let's take a quick peek at the chart. Okay, guys, we are looking at the Bitcoin chart, and we're looking at the weekly candles. And right now, I just want to point out to you really basic charting. Forget that we're talking about crypto for a minute. Forget that we're talking about Bitcoin. And just imagine that we are looking at candle theory, and we're looking at just charts, okay? And I like to do that because that'll work, I promise you. So this is previous resistance. It was defined here 1, 2, 3 times. Then we had a breakout, okay? And we had a couple wicks that got sold off, some profit taking, and we came back. And where do we come back to? And where did we bounce? We came back to previous resistance, this 108,700, right? And we've had a little bounce going. Now, we want to see this hold. Okay, this is the level that I had said that by the end of August, we need to stay above 110,000. So right now we're sitting at $110,610. We've got a handful of days left in the month of August. My assignment for Bitcoin, for me to agree that the trend is doing well and that there's nothing wrong and that we're just inches off the top, is that we hold this 108,700. So keep your eyes on that. If we hold 108,700, this is literally perfect stair-stepping action. That's very, very normal for a continued move higher. I just wanted to point that out to you. Now we're going to jump over from the weekly chart. So just remember those numbers, 108,700. It has to hold by the end of August. That's one of my important indicators, because I'm going to tell you that even though the trend's pulled back a little bit from all-time highs that we literally just made here very shortly ago, we're definitely in a massive uptrend on Bitcoin, and nothing technically has broken down. This would be an extremely bullish chart. It's just that Bitcoin's up at the top, and it's a little bit fearful because we're moving into September. Let's go look at the monthly chart. Now, I want you guys, there are people out there who know the things I talk about. There's some, this stuff is brand new for them. What do you pair the monthly chart with? Which moving average do you normally pair it with to get a really good eye as to what the trend is, to know whether the trend is bullish or bearish? You pair it with the 5 EMA. And that's what I've got on my chart. I'm looking at the historical index of Bitcoin. These are monthly candles, and we are above the 5 EMA. So anybody who's classically trying to determine whether or not an asset is in a bullish run is going to look at the monthly chart, and they're going to look at that 5 EMA, and they're going to say, okay, this is looking very, very, very healthy. You can see back here when we've had other runs, we've spent many months above the 5, and it was only after we broke beneath the 5 that we signaled that we're having a little bit of trouble. We broke back above it back here in 2021, and then we broke back beneath it. That was absolutely the signal that the 2021 run was over, that the top was in, and then it was going to be all down from there. So you can see, you might be able to see where I'm going with this, guys, is that we want to keep an eye on the 5, okay? And as far as these fib levels go, which I've showed you guys many, many times, we have this resistance at 101K, and we've got the 5. So the 5 is sitting here at around 105,000, about 105 to 106. And it wouldn't shock me if we came down and tested it one last time before making a push higher. But here's the important thing, and I want everybody to remember this. We cannot close below the 5, because then we would be setting up for a situation like this where we're not going to quickly recover. Okay, so it means that it means it's unlikely that we're going to see a top between October and November if we close beneath the 5. So I'm going to suggest that the trend is bullish, that it's extremely healthy, and that we're above the 5 on the monthly, that we did recently retest the highs where we got rejected. And then this is going to open up a couple of new points here for our conversation. Bitcoin thrives, and so does small caps, when the Fed cuts rates, when that increases the global money supply, when all the countries begin to ease because of the fear of a slowing economy. That allows the crypto and Bitcoin to pump. Now, we all know that we've got rates ahead of us, right? We've got some tension between rate cuts and Trump's tariff war, but, he's working that out. We can't say much more about it. Seems like the deal with China has been kicked down the road. Largely, he's working it out. So if we get those cuts this year, that's going to set up beautifully for the narrative that Bitcoin is still in a potential upswing with a peak in November. And so if we get that pullback, this is going to be, and you guys are going to hate it to have to hear it, it's painful to buy in those moments, but this may be that last moment between 108 and 105 in any type of volatile moment. This might be the last opportunity to buy. Or as Mark said, you could be literally buying as it tips over the edge. I have to give Bitcoin the benefit of the doubt. We're seeing institutional accumulation, and we've seen Bitcoin stacking. So what is that? That's when the institutional buyers are buying at a higher price, okay? It means that they're not sitting there thinking, okay, well, we want to be early sellers right now. They're saying, you know what, we don't want to be early sellers. We're going to keep buying even though we're at $109,000. We're going to keep buying because this asset might be 150, 170 in the days ahead. So, Mark, we are in a bullish trend, but the market has been shaking people's confidence because most of the retail listeners that are tuned in today right now, they're not even in Bitcoin. I know a lot of them are not. They're in XRP, they're in ADA, they're in Solana. And those have been absolutely in the gutter. And so there's just a real lack of confidence in buying right now. However, if you really take a step back, Bitcoin is not broken down. We've got time left in a traditional cycle. I timed the bottom successfully by taking into consideration where we were at and what type of events would mark the top. And we just haven't gotten those events. We haven't gotten all that time put in yet, and we haven't got those significant market events to mark the top. And I think when we get to easing and we get the rate cuts, we might run, and then we get those rate cuts, and that's when the whole thing could fall apart. So it all depends on what we see with. I'm gonna go off script here a little bit. Nvidia, Nvidia is going to have a huge impact on the markets this week. Just a massive impact. And it's basically a story between slowdown and pickup. And the only pickup story the market has, the only thing for them to hang their hat right now on is the AI story. And the king of AI is Nvidia. And so if they come out saying that big tech and global powers are frantically buying and investing right now, if they're spending, it's pushing money into the economy, and it's going to cause everything to boom. And so we're getting it tomorrow. We're going to find out tomorrow. NVIDIA's slowly coming up, and I think NVIDIA is a big enough story that it's either going to crash or pump everything tomorrow. What are your thoughts on all that, Mark?
Yeah, everybody's just waiting. I feel like in anticipation of those earnings tomorrow. And I agree with you on Bitcoin. I think if we start to lose key levels, then we could be in for a little bit of a downward slide. And one of your favorite indicators, Josh, the MACD on the weekly time frame just rolled over recently. And the last time that rolled over was, guess when? February, and Bitcoin went on a slippery slide down. And so I think this is the danger. People are expecting for September to be Rectember, and August is also usually a little bit of a low month. And that's right now, August is playing out as usual as kind of the third worst month. And we've got the Nvidia earnings, which is going to play a huge role in what happens in the stock market, which would then flow through into the crypto market. That's going to be big. We have the jobs numbers coming out early September for August, and the Fed has already said it seems to be prioritizing those job numbers, and the labor market has been weak. And this is why people are expecting the rate cuts. But what happens if the job numbers come in better? They don't come in weak. What happens if inflation goes up? I don't think there's going to be a rate cut in that case. I think if the inflation cools or stays steady as it has been, and the job numbers continue to come in weak, then that would strengthen the case for a rate cut. And I think this is what people need to understand. Everybody's just saying, yeah, it's going to be a rate cut, but what if the numbers don't come in like they are expected? That could be a bit of a surprise. So I think if people are buying a dip that has been dipping, and this is the end, you're going to make the same mistake as last time. You're going to buy your way to the bottom. And that's the risk. Now, am I saying that September will be the end? I'm not saying that, but I think we should be prepared for just in case it is. Because what if it is? Because everybody feels so sure that September will be our last chance to buy, our last chance to buy the dip, and then we're going to have one final hurrah into the sunset, and we'll all have time to get out of our bags. Listen, the whales need retail FOMOing in and buying to sell and get out. They cannot be selling along with everybody else, because for every seller, there needs to be a buyer. So I do think the MACD on the weekly, I think that's quite a bearish signal. And on the weekly time frame, you just had it actually on your chart. Beautiful inverse head and shoulders that would be invalidated really if we lost that 100K level there. So the 100,000 level would be more of my line in the sand there if we start to lose that. And of course, if we lose the 50-week moving average, usually that's it. That's the end. And that's a little bit lower down, 90. But I think by 100K, there would be a lot of nervous people there with the Bitcoins, I would think, Josh. But I just think, look, the top in at 124, I was able to get out of the positions there and be out, and I'm happy just to wait and buy back much lower. My strategy has worked. I've used the momentum indicators to my advantage. When the momentum indicators have flipped bearish, I've gotten out. When they have flipped bullish, I've gotten back in again. I'm out of crypto. I'm just trading it, day trading, in and out there. And it's working, and it's a strategy that's working. So either way, if it's the end and September is the end, then I'm good. And if September is not the end, I'm also good, because there'll be some kind of a reversal at some point.
Okay. Just real quick, I want to just mention we're getting a little pump here right now. I'm not sure.
Okay.
Maybe I know Trump was holding a meeting, and maybe he said something. I just want to comment that in the Stocks with Josh Discord, I know a lot of the folks here on this live are in my Discord as well. I gave a number of trade alerts, and we are really running a consistent theme. I can't guarantee you all these are going to go well. I mean, in our back test, we've run about an 83% success rate. But let me just highlight Tesla, baby. Tesla's pumping, making that money. I'm over here think you guys are thinking about Bitcoin, and I'm over here with my Tesla ATM making a withdrawal again.
Yes.
I alerted this morning to get into some Tesla calls. And we're doing really well there. Let's just pause, guys. Go look at Tesla. I promise I'll bring you back to the Bitcoin chart, and we're even going to squeeze in some Ethereum. Let me just pull this over. So I just want to remind you guys, I said on Monday's video yesterday, I said, you know what I like this week? What's looking good and strong is Tesla. And we're having a continuation of that. Now, I am not going to make any predictions that it comes to an end at 356. I am simply going to say that it has to get above 356 and specifically 360. Now, my trade right now is nice and in the profit. We bought some expensive options. Well, really the IV is kind of high on these. We got in around 1415, and these just hit 1600. Now that put these at around a 14% profit, and because these are a little bit more expensive, that 14% some nice gain. Now I'm not telling you to cut your profit. I will tell you that we're gonna live trade tomorrow, and I'm sure we'll get another shot at Tesla. If you're up on these, normally I cut at 20%. Because these were as expensive as they were, I might take a little off the table. I'm just telling you guys that right now. But I like it to 356. And if this were to get above this 356, 360 area, I mean, the opportunity would be crazy. And it's all going to come down to NVIDIA. It's all going to come down to what NVIDIA does. So I just wanted you guys to just keep your eye on that. We're getting some nice gains there. I wanted to go back to Bitcoin and make this point, okay? 85K is the most important price point on the chart. I spent a lot of time trying to determine where I would officially call the top as being booked and when would we technically no longer be in a full-blown upswing. I personally think that's 85K, and I'll tell you why. 85K is this, it was the breakout of the news of the ETF. Okay, so when the spot ETF was approved back in the first quarter of 2024, we got the high, we got that big fat green candle, and I think that if we retrace and lose 85K, I think that we have lost the significance of that news event, and it means that we are no longer riding on the significance of that news event. So I think that 85K is the breakdown. I wanted you guys to have that number in this video. I actually I'm bullish on Bitcoin. I'm not fearful at the moment. I have not shorted this. I do shorts all the time, but they're just like, shorts on the hourly chart. But I'm not shorting Bitcoin. I'm holding Bitcoin, and I think that we're still in for 140 to 150 and maybe even as high as 170. And it's not until we lose 85K do I think that that has changed. So I just wanted you guys to have that 85K number. We're pumped on our gains from today. We should have a nice, beautiful wins. I called Tesla as a buy. This is now at 1630. These options we got in at 1415. CCL, Carnival Cruise, we had a nice 20% win on that one. And I think we're going to close out a couple of these we're going to close out some of profit taking on these around 20%. All right, let's get back. So X21 says it's a bear trap. It could be, right? It could be. You've got to trade the trend. Now, I understand that some folks have to spend more time in the market to convince themselves of that truth. The trend is your friend until the end. Now, I just showed you, for those who took a minute to learn with me, I just showed you we're above the 5 on the monthly chart.
Yeah.
The trend is bullish. The trend is bullish. Yeah. Only when we lose the 5 and we close beneath it can anybody say that this trend is bearish. So, we're trading the trend, which is still up. So little pullbacks are presenting opportunity. And if you took that attitude that everything was a bull trap, we would have been out of the market, back in April. But instead, we've been able to make money. In my Friday video, I made a point. I said, guys, we've got to go risk on going into this week. You've got to take risk when the market tells you that it's bullish, and you got to be quick to respond if the narrative changes by the introduction of a new catalyst. The only new catalyst that's really going to hit us this week, there's two actually, is going to be NVIDIA, whether they are somehow losing some profits, but I don't think they are, because it seems like they're probably going to crush it. And then it's going to be the PCE on Friday. If that comes in unexpectedly hot, then that could present a problem to the Fed, being we're going to see the likelihood of a cut change, and it's going to drop. And then and now I made this point a number of times. I'm going to make it again today. The algorithm, if the algorithm sees a hot PCE on Friday, it will just sell. Nobody's making that decision, right? These Spartan and all these various programs, if that number comes in hot on Friday, it hits the sell button, okay? And so that's the way it works. And right now, we're waiting on the biggest catalyst of the rest of this year, which is the AI story 100% intact? And if it is, the market's going to rip. And I know people hear me say that, and they're going to say, "Oh, Josh, I remember on Tuesday you were pumped and you were excited." Yes, I am. Everything I bought this morning is cranking higher. Yes, I like making money. However, if this changes, and I gave you the trend lines, I'm giving you those important lines. If it changes, you got to take action. You got to close some things down. And you also heard me say that I'm only up 20% on some of these positions. And what am I doing? I'm shrinking my position size and taking profit. You got to have more. You got to have strategy. You got to have a plan. That's what we teach. All right, Mark, real quick, I would love for you to comment on the liquidations we saw and why we're going to get more volatility as we are sort of in this pocket before the markets really choose to break. Why do we see these crazy drops from 125 all the way down to 109? Why do we see them? 108, 900.
Yeah, we had this whale that owned 180,000 Bitcoin, sold 25,000, still holds 150,000 Bitcoin, by the way. So watch out. But selling on the open market like that is very unusual. Usually these things are done OTC, which doesn't actually affect the price in the short term one bit at all. That'd be like OTC, over the counter. That's like me saying, "Josh, I want to buy a Bitcoin off you. I'm going to send you some USDT to your wallet and you're going to send me a Bitcoin." It doesn't affect price, that transaction, at all. And so that's how MicroStrategy buys all the Bitcoin. That's why people go, "Why isn't the price pumping when he buys?" Because he's buying it all OTC, okay? And so this whale just unloaded a clip like that on the market. And what it does is it causes a cascading number of liquidations. So you have people that have gone into Bitcoin positions and have borrowed a lot of money, many times, 100 times. They call that 100x. And so what ends up happening is that those people, those positions get called in and liquidated because they have a liquidation price, because the borrower doesn't want to lose their money. They're happy to take yours. And so as soon as your money runs out, they take those. And what that does is it's like a spot sell on the open market, and it causes, and everybody's going, "Who's selling?" Well, no one really. It's just all these people getting liquidated. And the irony of it all is people say 21 million supply of Bitcoin, but when you're borrowing Bitcoin at 100x and you have all these people doing it, it's paper Bitcoin. And that's why the price is so volatile. And really, until they start to scale back and stop this 100x, 50x, and only allow people to get leverage against Bitcoin that actually exists, otherwise you've just got paper Bitcoin and there's Bitcoin being sold that doesn't exist, essentially. And that's what causes these liquidation to the downside there. And that's why it can cause it to move so fast. And in the opposite way, of course, it can move quite quickly. If the price pumps, it begins to liquidate all of the short sellers who have borrowed with high leverage against their position. They get liquidated, and that's like a spot buy, a lot of spot buys, and that cascades. And that's why it's called a short squeeze, because all the shorts get squeezed, liquidated, they lose all their money, and the price shoots up. And that's why you see these violent moves to the upside and violent moves also to the downside. And that's why it's really important when the price, there's a big difference between buying a dip at some confirmed support and buying a dip that just keeps dipping. I call that pin the tail on the donkey trading. You're just guessing. You're just throwing with a blindfold on. You're trying to pin the tail on the donkey. I prefer a much more strategic way where you find some support, where there is a level of confirmed support, buy that support, enter in at support. That makes a lot more, a higher probability that you're going to affect a winning trade. And of course, still have a stop loss there, that if that level gets lost, then you can get out of that position at small loss and rinse and repeat, rather than just keeping buying all the way down, because otherwise people are just catching a falling knife. And this is what we saw over the last few days. People go, I'm buying. And then I saw people saying, "Oh my gosh, my dollar cost average bag is bleeding." And really, it's not a dollar cost average bag. It's a pin the tail on the donkey bag. You tried to catch a falling knife, and that's what happens when there isn't properly identified support and resistance. And this is the importance of trading the trend, Josh. This is one of your top four rules, and one of the most important. And when the trend is going down, where should we be making money? On the way down, by learning and educating ourselves to short and make money as the market is going down. Number one. So now we're making money as the market's going down. Number two is we're waiting for a confirmed support to then enter and buy the dip, close our short positions, buy the dip correctly, hold as support, and then ride that up. And if for some reason it's a fake out and it drops back down again, we stop out, because what's one of your other top four rules? Trading with a stop loss, okay? And then we can then short it again as it goes down. And that the way, if we are going into a bear market from here, and I'm not saying that we are, we can make money all the way down to the bottom, and then make sure that we buy the bottom and have money. Because otherwise what happens, if you buy the dip and it just keeps dipping, you don't have money to buy, you're down on your purchase, and you miss out on those bear market opportunities. And thirdly, you don't make the money as the market is going down to the bottom and shorting the market as it's dropping. So that's been my strategy, and I feel that that strategy has really worked. And I think it's really just common sense of trading the trend, using a stop loss, and having a clear strategy.
I love it. I love it. Thank you for breaking that down for people. Guys, I want to remind you, first of all, take a minute and hit the like for me. If you are brand new to this page, I have a pro trading community called ChartGoat University. It's the SWJ Heart Fam. If you're a member of the SWJ Heart Fam, drop a heart in the comments for me. But if you're not a member, then you can come and join me. You simply go to the website, which is the same name as the show. It's www.stockswithjosh.com. I'm over there. I teach, I trade, I share with you guys what I'm doing. We're constantly adding to it. Gave 5 GOAT alerts today, I believe, in total. And I think the majority of them are in profit. 1 or 2 are flat. Mark is over there, and he shares what he's doing and really answers the majority of crypto questions that are going on. Let's take a minute, guys. Hit the like, but let's take a minute and talk about Ethereum. Ethereum, it finally woke up. It said, I'm not dead. I matter. I'm relevant. I'm the largest smart contract platform in the world, man. I kicked this thing off. And let's go take a minute and look at the chart. I'm going to get Mark's reaction to it as well. I'm just going to give you guys some really simple charting, and we'll go from there. We're going to be looking at weekly time frames. And I think I have the 21 EMA on the chart, but let's double check. Give me a minute. So each of these, yep, we got the 21. All right, each of these, matter of fact, let's change this real quick to the 10 because it's so hot. Yeah. Ethereum is so hot, we need to be looking at the 10. All right, I want to let's go over the last peak that we made, and we actually have finally broken out here. I want to talk about this being a triple top. And I want to do some very, very basic charting on this, right? So when you get these types of tops, now this was a failed breakout, okay? And so we never quite got this fulfilled, but we've come over here and we've got this double top breakout. So this is a triple top breakout. We can go from the neckline down to the middle, the lowest part, and put that on top of the breakout, which would suggest that if we complete this move, that we would get to 6K, okay? That's what this chart is, and I like to keep charting simple, and that's as simple as I can get it. This is a very, very strongly confirmed breakout, triple top rejection breakthrough. So it's even stronger than, let's say, a regular double top breakout. We had a huge little valley here, and this is telling us that we ought to get to 6K. Now, I want to let's go back and learn from the past, okay? We have the past here, right? And I want to just look up some percentage moves here, okay? So from this valley low to this top, this moved 184% after it had an initial run-up, and it pulled back and consolidated. And here we were in July of 2021 at the low. It had 184 pump until it came to an end. Let's just run over here. I'm gonna delete some things, and we're just gonna see what type of percentage we're looking for. All right, and this doesn't mean this is what it's gonna do, but it's good to keep an eye on it. All right, so this is and I want to explain the differences in percentages, because visually you're like, well, that looked smaller than this looked barely smaller than that. That was right around 170. This is 244% that we've moved off of the lows. Okay, and that's simply because you've got charts and you can look at them logarithmically, right? Or you can look at them, I get the other term incorrect, arrhythmically, I believe, but I'm not entirely sure. So I want you to understand we've had a massive, massive pump on this. I think that the potential move is upwards to 6,000, but that is dependent on the idea of the macro and the Fed easing and Donald Trump resolving the tariff war and maybe even lowering some tariffs and global economy booming through AI. With all of that, yes, this can continue to run, but it is already up 244% off of its recent lows. And so, I kind of gave this warning. I think it was right here. Yeah, it was right here. I gave the warning that if you're going to come tardy to the party and you're going to buy when Bitcoin is, above 5,500, you might get the last $500 move, and you just shouldn't touch it, right? If you didn't buy back here, you really shouldn't touch Nvidia at this point. If you're in it, I really don't have any large motivation to sell. And I'm going to give you one more bullish identifier, okay? And the number I gave you of 6,000 is a potential. It doesn't have to be fulfilled. These are not always fulfilled. So you say, Josh, you said that if it crossed, it gets to. No, it gets to that between 60 to 70% of the time. So not 100% of the time. But the next thing I want to point out to you is that we have relatively bald candles. And you say, what do you mean by the fact that we got bald candles? Whenever you hear me call a candle bald, I'm not being mean to it. I'm acknowledging that there's not a massive wick like this one back here. Okay, it means that it's not suffered any selling pressure. This is almost a bald candle in my mind, which means these candles stack on top of each other. So I'm expecting another candle up here. And because I don't see any wicks. And so I don't see why we wouldn't get to 6 minimum at the moment. And I don't see any wicks here. And this is what I want to see before I, think that it's time to get out. I need to see this massive seller's wick. And we just don't see those here. Matter of fact, we really could get going on this thing and start really moving. I would say that it's going to take a macro event. It's going to take Nvidia to confirm it's to get people into a frenzy. They're not in a frenzy. People are cautious and fearful and neutral, and they think we're at the top, and they're just being patient and waiting for a sign and a signal. But if Nvidia gives it to them and the market begins to run, then everybody's going to pile back in. So I like the Ethereum chart. Nothing about it's bearish, and nothing is signaling that the move is imminently coming to an end. Matter of fact, the Ethereum chart looks way better than Bitcoin. Any thoughts on that, Mark?
Yeah, the Ethereum chart does look a lot better. The daily chart, there are signs there. We've got some momentum indicators rolling over. The stochastic, the MACD on the daily time frame. It's a shorter time frame, but the bigger time frame moves always will start bearish, smaller. I think as long as it stays above that 9 EMA on the daily, it's kind of governed that entire move from April all the way up there when it did break above it, the 9 EMA on the daily. And then when it has lost that, it's interesting, you had the 20 EMA there on the chart. It's found the 20 EMA as support. And what happened again on this dump, Josh, was it melted through the 9 EMA and found support on the 20, bounced off the 20 and came back above the 9 there. However, you do see a couple of peaks there on the daily, a potential double top there. September hasn't been the friendliest month for Ethereum. Tom Lee has been a big reason, and I'm going to argue the sole reason, that Ethereum is even where it is today. Buying a lot of this pump is his money, or I should say BMNR's money, but he started buying in June, And if you look at the price of Ethereum, it was pretty flat. And then as soon as he started to buy, the market cap, if you actually measure the amount of money that he put in and measure the market cap that has grown, it pretty much equals the amount of money that he's put in. I'm not saying that he's the only one buying. I'm just saying that this is a pump that is highly, highly driven by a single entity. Tom Lee has great exposure on the TV and has had some great calls in the past. And it would be dangerous to say that he's going to be wrong with his predictions of 15,000 plus of Ethereum. And I'm not saying he's wrong. I'm not saying he's right. I just think, like you say, Josh, the price is truth. And while the trend is up, I'm going to ride it. And when the trend ends, it's going to start a new trend, and I'm going to short it down. I recently longed Ethereum from 3,800 up to 47 and shorted it back to the CME gap, which I gave at around $4,085, and it got down to $4,065. So it's just making money when it's going up and making money when it's going down as well. So I agree with you. While it stays above that 9 EMA on the daily, and particularly above that 20 EMA, look, maybe a day or two candle close below, but I think if you flip to the 3-day chart, there's a 3-day candle below the 20 EMA on the daily, and especially a weekly candle, then there would be some warning bells that we're having that usual pullback in September. But of course, if the bull run continues October, November, December, that could provide entries for people. Like you said, I agree with you. If you're tardy to the party, the risk is more to the downside.
Wonderful. Hey guys, I think we're going to leave it there. I've got to be bullish on the markets. Tomorrow, it wouldn't, and nothing would shock me. We're going to have a tough decision if the markets continue to rally tomorrow in anticipation of Nvidia's earnings. You're going to be in a tough spot where you got to decide whether or not to cut and take some profit. And I know myself, and this is the reason why I'm going to do it. I'm going to cut some positions and take profit. Why? And I want everybody to hear this who's a retail trader. The OGs know it. What I love about Wall Street is that every 5 minutes it sends a new train, okay? And every day there's a brand new incredible opportunity. Okay? So because of that, I can always feel comfortable taking some profit and waiting for the next exciting thing to come along. And the next exciting thing could be anything. It could be a reversal, and we could be jumping on Nvidia 2 bear leverage ETFs, and we could be riding this thing down for the remainder of the month. I'm not predicting that. I like the market. I'm risk on. I told everybody on Friday's video, we had to go risk on going into this week, and that's exactly what I did. And right now I'm enjoying the profits. Appreciate you guys joining me today. Don't sleep on the Stocks with Josh Discord. Don't sleep on Mark from Tribal Trades YouTube page. Go over there and support him. I think he's a very unique voice in crypto personally. He really goes after the subject very broadly, and he's a very consistent trader. He's not one of these guys that's pump everything forever and everything's got, every $3 crypto is going to, $500. I'm gonna throw up the chart by inspiration of XRP. Just because I want to show it to you. And I'm going to have a very friendly conversation about XRP with you guys. Nobody needs to panic. I'm not going to fight nobody. So one of the things that XRP has to deal with, and I tell you, I hate to even say anything because the XRP folks, very sensitive army. It's a very sensitive army. Okay. So they have these constant, unlocks, you could say, or these large amounts of positions that people are holding, and they had $1 billion with. Guys, $1 billion is a lot of money. So if you've noticed that XRP did come up off of its lows a little bit, but it didn't really rip the way some other things have. I mean, go compare the XRP chart to Link chart and see how well Link is performing. It's performing great. XRP a little underperforming because they had $1 billion of selling that they were
tokens.
A billion tokens. I'm sorry, 1 billion tokens, which is way worse than $1 billion. Matter of fact, before I get into the chart, and what I think that means is that they're selling into strength. Who? The founders, the ones who provide the message, the one who we have to trust to build this project to become what you hope it to be one day. They're dumping on you in what really should be considered one of the most profitable moments. If we're really going higher in October and November, why would they be unloading 1 billion XRP if it's such a good product? Why are they selling? You know, on Wall Street, we look at companies, and when the CEOs are selling, that's a warning sign to us. When you can sell for lots of reasons, true, but you only ever buy for one. I mean, these guys ever going to buy any XRP if they believe it's going to be the future the way that it is? They're only selling billions of dollars. Mark, I'm going to let you comment, and then I'm going to go look at the XRP chart, and then we're going to wrap this up before the XRP army comes at me, comes for me.
Yeah, let's have a stock buyback. Let's have XRP buy
that's what I'm talking about.
Tokens there, and really, it's a billion tokens every single month, not just a one-off event. And it's not always a billion tokens. Sometimes they pop it back into escrow to sell it, but that just pushes it down the road. And at the moment, if they've got 55 billion tokens available to dump 1 billion each month, that's 55 months. If they don't dump all of it, then it just gets rolled on and it just continues down. But yeah, I'd like to see an XRP buyback by the founders, like we see stock companies. They believe in their product and they do buybacks. We ain't seeing any buybacks from XRP. It's all just selling.
Yeah. Now I got to keep my eyes on the comment and make sure that they're not getting mad at me. Ray's Mania says, I have an empty bag of XRP, LOL. All right, let's go look at the XRP chart, because believe it or not, after that, as long as Bitcoin's still going up, I see XRP making a higher high. Let's go look at that chart real quick. So we're going to look at the weekly candles again, and I'm just going to show you, we're going to keep things simple. We're not going to, we're not over here with wild imaginations. We're here just looking at charts. We have this little bit of channel that was being developed, right? And you can see we fell out of it, we popped back into it, respected it some more, fell out of it again, popped back into it, but ultimately fell out of it. And this, I call this a checkmate pattern. I've taught about this many times. Is when you have a large drop, a sideways period of consolidation, and then you get a weekly candle or whatever candle it was that had failed. Over here, these weekly candles, and it closes above. So this candle was a great confirmation of this move, and we're going to do the same thing. We're going to kind of take the breakout, the neckline, and we're going to bring it down to the middle. And we're going to look at that. We're going to pull that up here. Okay. We haven't completed that move. That move, right, gets us up here between three. So nothing, no fancy fundamental view of how XRP is taking over the world. Just old-fashioned candle theory. $3 is significant. It's important to hold. I believe that this confirmed bullishly, and it tells me that we should get up to around $4. And what's interesting to me is this really is going to come down to whether or not it breaks back above and into this channel. So if I gave a target once of $4.40 way back here, okay? I think I gave it, I'm not sure. It was somewhere back here I gave that target, okay? And so it'll be very interesting to see what happens in the next 3 months with XRP if I called it perfectly. Now, I'm not saying that 440 is all it can go to. I'm just simply saying that I think for sure it would go to 440. That was my view at the time, that we ought to at least get 440 if Bitcoin has a full uninterrupted move. And so what I'm predicting right now is that we get up here between $4 and 440, and this is where we find out whether this is really going to go on a bigger pump. Now, if this becomes an extended rally and we're back inside this channel, we can always go back to the top of the channel, and that would bring us up to right here around 580. Okay, so this is where anything in this channel, we have to see if it holds for a week. But if it held and we built along the bottom of this channel, I don't see why we couldn't make a final move. Let me. I'm getting a little bit of a. Everything good over there? Okay. My tech was messing up a little bit. So This is, I want to just say a couple more things about XRP, because I know you XRP people don't get good charting. You just get everybody telling you it's going to be $500. So today is your day. Let's do some more charting. All right, we got a little bit of a sort of I don't know whether I would call this a descending channel, but I would say that it's consolidated on previous support. It hasn't broken down. And I do think that if we get a nice push here and we want to check volume, let's see. Yeah, so we really need to see this break out of this descending line of resistance, and we need to get a volume node equal to this one that we got back here. So we need to get a pretty big volume node. Why don't we have that volume node? Because all the XRP guys are selling. If they could just stop selling and the market begins to pump, and this gets that signal, this volume signal, then I would say that there's no reason why this won't get back up to 440 as my next primary target, 4 to 440. So we'll leave it there. Let's see what XRP does. You always, if you're a chart guy, right, and you don't have to be, but if you're a chart guy, price is truth, volume is confirmation of truth, okay?
Yeah.
So price is like an opinion, and volume is the second opinion. Right now, volume on XRP is extremely weak. It's extremely weak. So because, it's hard to get a buying frenzy going when someone's selling a billion XRP on top of you. It's really hard. So, but we're loving Ethereum right now, and the chart looked great and the volume looked great. And I appreciate you guys joining me today. Peace and blessings to you all. Make sure you hit the like and subscribe, and you check out Mark, and come join us tomorrow morning. I'm going to be live trading in the Stocks with Josh Discord. Hope to see you over there. Have a wonderful day.
Thank you all.